Hi everyone, I'm James Harte from littlefishfx.com. Thank you for joining me for this week's session. Now, for the last few months, we've actually been running a weekly education session where we've looked at a huge range of different aspects of technical analysis. And as we've sort of hit the limit there in terms of the topics that we can discuss, we're now going to move on to do a live analysis session each week instead. So for those of you who have been following the webinars, this will be a really great opportunity to see me putting into practice the sort of topics that we've discussed in those sessions, such as trendline analysis, structural analysis, Fibonacci analysis, price action reading, and so on. And so essentially each week we'll take a rundown of major currency pairs, talking a little bit about the key fundamental developments, and then taking a run through the technicals to establish a directional bias and highlight any setups that we might have. So as ever, if you have any questions during the presentation, please just write them in the chat function and I'll stop periodically to answer them. Okay, so let's kick off by looking first of all at the US dollar index. So for those of you who don't know, the US dollar index is a weighted index of the dollar's performance against a basket of currencies. And consulting this chart can help give us a sort of broad idea about potential US dollar direction, which we can then obviously cross-reference with our analysis of the major currency pairs. So the two won't always sync up, but where our analysis of the dollar index is in sync with our analysis of the USD pairs, it can be very powerful. So starting with the weekly chart then, we can see straight away that we have these two big former highs just below the current level. So the 2004 and 2005 highs that remained unbreached for roughly a decade before we saw price exploding up above those levels to print new 12-year highs before stalling out, reversing, retesting this zone. We got a bounce, we took another run at the high, we failed there, so we put in a double top, traded back down, and we're currently stalled at a bounce off this level. So crystal clear here, rather, this is very important price pivot zone. So around this $92 mark, this is a really important price pivot zone. While we're above this level, we can expect to see a rotation higher. If we get below that level, then we can expect to see a continuation to the downside, and we can look to use that level to play against. Now, to the top side, we obviously have some more key resistance just above the market. So initially, we've got this double top zone that we've highlighted at around the $100 mark. Then just above there, you can see that we have these two broken lows, which also come in at around this previous high. So this is going to be the next sort of major resistance above the market at around the $106 level, the $104 to $106 level. And then obviously beyond that, we have the sort of ultimate bearish trend line. So coming down from those 1980s highs, 1 second. There we go. Okay, so coming down from the 1980 highs, taking in the sort of early 2000 highs, and so that's way above the market. But for now, if we focus in on the local price action, we can see that what we're actually exhibiting in the US dollar at the moment is just a typical range-bound formation. We traded up, made this double top, traded back down, retested those broken highs, and this is now holding as support. So whilst we're above this level, as I say, we can anticipate that we might get a rotation higher. And if we look at that last weekly candle that we printed last week, you can say that that was actually quite a strong reversal candle. So we came on the back of that bearish expansion bar, we ran those lows, and then we reversed sharply higher to close with this reversal bar. So we can expect really to see a little bit more upside here. If we drop down to the daily chart then, you can see that what we've actually got clearly from the sort of November period last year is just a typical bearish trend formation. We're making a series of lower lows and lower highs. However, as I say, until we take out this low, we really are just stuck in this price range. And really for me, as momentum seems to have waned here to the bottom side, I'm actually starting to look at this formation as more of a wedge. So for those of you familiar with chart patterns, you'll know that the falling wedge is a bullish reversal pattern. We've obviously got this bearish channel here, but you can see that the price action is just starting to tail off and we're starting to get this wedge. So if we do see a break to the top side here, the next zone I'm going to be looking at really is a retest of sort of this low here around the $95 mark against this channel resistance. And this is going to be quite an important zone because we're either going to stall out here and confirm this bearish channel and make another run at the downside, or we're simply going to reverse higher. And then once again, we're just back into that range. And so really, there is no clear resolution of this range until we break either side. So whilst we're in the middle of it, I'm just expecting to see more rotation. But for now, a mild dollar positive bias. Okay, so now we've consulted the index. Let's take a look at euro dollar. Let me just grab the charts. Okay, so again, starting on the weekly chart. And the first thing that jumps out with the euro dollar is this pair of rising trend lines at the lows that we can draw. So from the November low, taking in the March low, and then the same trend line here, taking in the April low from last year and the July low. And you can see that we're currently in this rising bullish channel, but it's really more of a corrective structure. If we look at the longer term nature of the euro, where we've had this big bearish decline, this really can be seen as still simply a corrective formation. So we've traded up into this level here around the 117 mark, reverse sharply. And you can see that at the moment, we're simply stalling at a retest of the bullish channel resistance line. So whilst we hold this resistance line, I'm still looking for this to come down lower in line with my mild dollar positive bias. You can see we've also got really good structural resistance at this level. So there are several previous areas from last year where we saw key bearish reversals from this point. So this is a really important zone for the euro dollar. Now, obviously, again, this is the key price pivot. Okay, so you can see that this chart is really just the inverse of that US dollar index chart that we just looked at. So if we get above this level, close and hold above it, then obviously I'm going to be looking for a continuation higher in line with the recent bullish trend that we've seen. But for now, whilst we're holding below this level, and you can see again, we've got that key reversal candlestick on the weekly, I'm really looking for price to make another run down into this channel support. Now, if we drop down onto the daily charts, then you can see again, we're just exhibiting that classic bullish structure. Again, just the inverse of the situation with the dollar index. We're just making a series of higher highs, lower lows, higher highs, lower highs, rather. Higher lows, a tongue twister. And so whilst this is maintained, it's reasonable to expect that we're going to get another push to the upside. Now, if we drop down onto the H4 charts, and these are actually the charts where I do the vast majority of my trading, really. So you can see for now, we're stalled at this interim support zone. So these two previous highs from mid-April, three previous highs rather. This is where price is currently stalled at. So again, this is quite a key interim pivot point for the euro dollar. If we can get a clear break of this level, you can see we tried it, but we reversed and closed back above. If we can get a clear break of this level, possibly a retest of it, then I'm going to be looking for the euro dollar to come lower. And the next key zone really that will be a target for a short trade that I'll initiate on the break of these lows is going to be back down into this sort of 112 to 112.13 to 112.54 zone. So that's going to be the target for that trade. And as we move down there, you can see that we've also got the 50% fib retracement from that March low. So this is an area where I would expect that we're probably going to see a little bit of stalling, okay? So if price breaks down below here and retests this zone, this is going to be the next key pivot point for price. If we get a bounce here, then that could be the start of the rotation higher. Obviously, if we do get a bounce there, then the next level that I'd be looking at to act as resistance would be a move back up into this zone here around the 114 mark, where we'd actually have a head and shoulders formation forming. So if we start to see price stalling there, then that could negate further upside. So again, for now, really a question of waiting to see which way we break. If we do get down below this level, then clearly I'm going to be targeting a move down into this channel support around with 78.6% retracement from the March low. So that's what I'm looking at with the euro dollar. So I'll be keeping an eye on that over the coming days and really waiting to see where we break out. Obviously, flows are a little bit stifled at the moment. We've got an absence of key US data this week. So really it's going to be until Friday, I think it is, when we get the retail sales data. That's probably going to be the catalyst for a move. We've got Michigan consumer confidence also. So it's going to be later in the week when we get some sort of resolution of this range, if we get a resolution of it at all this week. But for now, I'll be keeping an eye on that, seeing where we get to. Taking a look at cable then. Cable, another really interesting chart here. You can see that we made a sharp break of that 2015 low, traded down to make new lows this year. Took a run at the 2008 lows actually, but failed just shy of those. We seem to retrace back up, and we're now currently stalled just at a retest of those broken lows. Okay, so that previous low that was support has been broken, now turned to resistance, and you can see that price, it likes to hang out around this level. We've come back up to it twice now, and so again, this is the clear pivot point for cable in my eyes. If we can get above there, then I'm going to start to look at a run, possibly back up to these highs. But really for now, and again, basing this analysis on that key weekly reversal candle, you can see we had a really large bearish reversal candle on the weekly. Whilst we stay below this level, I'm anticipating that we're going to get a break lower. Now, if we go down to the daily charts, for those of you who are in the harmonics webinar, for those of you who consider those type of structures, you can see that we had that classic ABCD correction that we talked about, where we got that symmetrical move higher, the equidistant swing into the 127% extension. We've got that big reversal candle, and now we're moving lower. So if we're thinking of the current moves in terms of this structure, then really the target is a move back down to lows. So for now, again, quite similar to the euro, you can see that we've retraced back down into an area of prior resistance, now turned support, which is at these previous highs here. So around the one, that's a little bit high, sorry. So around these previous highs, where we had that sort of mid-March head and shoulders pattern that failed to break the neckline and then reversed higher. So where we've got this previous resistance now turned support, you can see price is currently stalled out. If we drop down to the H4 charts, it's the same thing really for me. Again, I'm looking for a breakdown here. I'm a little bit wary of playing these in the low momentum days. So you can see, like with the euro the other day, we actually ran the low of this block of consolidation. However, for me, that wasn't a breakout trade because there was simply no volatility in the market. Okay, and what we often see in these low momentum days is price liking to test the highs and lows of these ranges to clear any stops before just reversing. So really it's going to be later in the week, once we get a return to key data and we get some possible momentum in the market. Obviously cable, we're coming into a key day tomorrow, the Bank of England's Super Thursday event, where we get the rate decision, the release of the meeting minutes, and also the update to the quarterly inflation report. So currently cable is under a lot of pressure. Latest Brexit news showing that the latest polls are suggesting the Vote Leave campaign are in the lead again, which is adding to economic concerns for the UK. And this comes hot on the tails of a raft of weak data out of the UK recently. We had those 3 PMI misses last week. And actually just today, we've had UK manufacturing output falling its biggest level year on year since 2013. So from a fundamental perspective, cable is under a bit of pressure. Obviously, any sort of recovery and risk appetite at the moment keeps cable supported. But coming into the Bank of England event tomorrow, it is certainly possible that we could see a downside break here. So I'm going to be keeping an eye on this chart. And obviously, if we do get below this level, this 143.80s level, the target for a move lower in the interim is going to be around this level here, where we get these previous highs and this previous support. But if we do get some decent volatility and we make a proper break, then the obvious target is for a move back down into this level. So this is really the key support for cable down here and around the 140.51 level. So this zone where we had all of these previous lows back in March and early April, this looks to be a clear price target if we can get down below this level. Again, whilst we hold above this level, then we can still anticipate that we make another run higher. But just referring back to that weekly reversal candle, it still looks to me like the most obvious move here is to the downside. Okay, so moving on, let's take a look at dollar yen. So the dollar yen, is this the daily chart? Yep, it is. Okay, so the dollar yen, you can see that we've been in a clear bearish trend over recent months in the dollar yen. We've had the Bank of England, the Bank of Japan rather, enacting negative rates for the first time in their history. However, the move was largely ineffective and speculators quickly ramped against it. And then obviously we saw recently the Bank of Japan remaining on hold, which actually shocked markets as they were expecting to see some further easing announced. So this move by the Bank of Japan to keep policy at its current level rather, actually shocked markets, and the reaction we saw was quite violent, with JPY being strongly bid. So this is the current situation, dollar yen, where you can see we're just showing that clear bearish trend as we've seen on the dollar index chart. Now, this is a really great technical chart at the moment because we've got a couple of really great standout levels. So this zone back up here is the one I know that a lot of people are looking at if we do indeed return to those levels. So the 115 to 116 level, where we had all of those prior supports, and really it's the neckline of this big head and shoulders move that we saw. So from a classic technical perspective, the break of the head and shoulders has actually completed its target now, with the move equal to that of the distance between the head and the neckline. From there, you can see that we bounced, and the move completed down into this double bottom zone. We actually came just shy of it. So we've moved down into this double bottom zone. We bounced higher. And so if we drop down to the lower time frame charts, because this really is where we need to do most of our analysis on the dollar yen at the moment, because this sort of bearish trend structure that is playing out has just recently been challenged for the first time. So you can see, looking back at recent moves, we've had a breakdown, support, breakdown, support, breakdown, support, breakdown, support. But now this latest rally has actually taken us back above that last broken support turned resistance. Okay, you can see we had a similar sort of move back here late April, where we moved back above that 111 broken support zone, now turned resistance, failed and turned lower. However, the bounce from the late April low has actually taken us back above this key 107 resistance zone. And so whilst we hold above this level, I'm anticipating, again, in line with that mild dollar positive bias, that we're going to get a run back up to this level, and I'll actually be looking to use this level as support. Okay, again, for those of you familiar with the patterns, if we get a break higher here and then a retest back down into this level, you know, we'll have that inverse head and shoulders pattern at the low, which is a great key reversal pattern to keep an eye out for. So if we get a move that looks something like this, a challenge of this area, move back down into this broken resistance, now turn to support, we could get a bounce there, and then really it's a question of taking out the bearish trend lines that we can draw. Obviously we have some trend lines of different gradients here that we'll be looking to cap price. So again, as with the other pairs, it's really a question of seeing how we resolve out of this current low momentum situation. Yen has actually been one of the strongest movers on the week, falling lower as risk appetite has rallied a bit. So another one to keep an eye on. Again, US data later in the week likely to provide a directional catalyst for further moves from here. But this is a pattern that I'm going to be keeping an eye on. If we fail at a retest of this zone, trade back down and retest this support, then I'll be looking to play long from here as a potential right shoulder of an inverse head and shoulders pattern. Alternatively, if we get the break above this level and we get the break above this area here at 111.73, then that really confirms the breakout, and it's about looking for a move back above this zone here. So I'll be keeping an eye on dollar yen also over the coming days to see where we get to. Moving on then, and dollar CAD. So dollar Canadian, again, another really interesting chart. At the moment, you can see that we've had this really sharp decline since the December 2015 highs. We've had a sustained rally over recent years, the last 3 years or so. But this really sharp decline that came from November last year as the oil prices started to recover. So obviously oil has been in a strong bearish trend over recent years. Concerns for the global oversupply in oil markets have been weighing heavily on prices. But recently we had optimism starting to build around a potential production freeze deal between Saudi Arabia, Russia, and other OPEC members. However, recently these deals have fallen through, this optimism is fading, and once again, global oil supply, oversupply rather, in the oil markets is starting to weigh on prices. Saudi Arabia today just coming out saying they're going to increase production over 2016. So just recently with the dollar CAD then, from a technical perspective, this sharp decline has stalled as we've retested those sort of early 2015 highs. Okay, we tested a little deep into that area, but you can see this was quite an important area for the dollar CAD over quite a few months at the start of 2015. So a lot of order flow going through at that point, and you can see that the market strongly rejected that zone. Okay, we got this huge bullish engulfing candle on the weekly charts. So just as we've seen with these other pairs at the moment, we're getting some really key readings on the weekly charts. Okay, and the weekly charts can be a fantastic predicator or indicator rather of likely reversals to come, where we see these large rejection bars, these large reversal bars. These can be a really good telltale sign that we're starting to see some trends ending and changing. Okay, the same way that we got that big bearish reversal candle at the high, this big bullish reversal candle here at the low says to me that we could expect some further upside in the dollar CAD. Now we've recently just broken out of the bearish trend line, which has capped price recently. Okay, you can see we had 4 solid touches of that level. We've recently broken out above it, and we've currently stalled at a really key resistance point for the dollar CAD. Now, based on that key reversal candle that we've seen on the weekly, I actually tried a breakout long here above this level. It was just stopped out on that move petered out, and we've reversed here, but I'm still anticipating that whilst we can hold above sort of this support level, and if we test deeper, maybe even a retest of the broken bearish trend line, I'm still anticipating that we're going to get a move higher. However, you can see this is key structural resistance for dollar CAD at the moment, this 129.70s area where we had those 2 big previous lows, a break and then a retest and resistance. So the key pivot for the dollar CAD rather is definitely this area here. If we can get back above there, then it's really a question of looking at targeting the next swing high at the 131.45 level. Now, if we go ahead and bring in the fib retracement here, you can see that move just stalled out at the 61.8% retracement level. And so what we might actually see here, and what we see oftentimes in these sort of breakout moves, is where we retest the back of a broken fib level. Okay, so you can see we traded up, hit the 61.8, traded back down. And so what I'm anticipating is that we already retested the 50% level there, so the support might not come in at that level. But if we move a little bit lower back into this broken 38.2% retracement with these lows, then we could find some support there. And again, similar to the dollar yen, we've got that inverse head and shoulders pattern. Okay, I won't draw it in this time, but the left shoulder, the head, and the right shoulder. So this is going to be an important pivot point for the dollar CAD if we get back down this far. And from here, if price action starts to display that the market is holding this level, I'll definitely be looking for a rotation higher. Okay, so the Aussie dollar next, and let me just get rid of all my previous scribblings. So the Aussie, again, another really interesting chart. And what we're seeing here across the board is that all of these markets were at really interesting inflection points, okay? We recently rallied up to retest those broken 2000 or early 2015, I should say, lows, where price was stalled out for several months. We then broke down, we made a base here. You can see we had that big double bottom, traded higher, retested those broken highs, actually rallied above them and got as high as the June 2015 swing high, where you can see price stalled out there and collapsed sharply. Okay, the catalyst for this move, obviously, the RBA cutting rates for the first time in 2016, citing deteriorating inflation outlook. They actually came out and lowered their inflation forecast. So there's definitely room for further easing to come. Markets have jumped on that, and the Aussie has collapsed lower. Now, again, where have we collapsed from? So this retest of these broken support zones turned to resistance has taken us all the way back down into these broken resistance levels turned support at around the 173.50 zone. If we zoom in there, you can see these two big previous highs which capped the rally in the Aussie last year were since broken over the rally that we've seen over the early part of the year. We've now traded back down and retested this zone. And again, if we go ahead and draw in our Fibonacci retracement, you can see that that level ties in nicely with the 50% retracement. So this is the clear pivot zone for the Aussie dollar at the moment. Whilst we hold above this zone, I'm expecting that we could see another move higher. If we do, then this area here around 175.03, 174.83. So this is a clear level of resistance. If I go ahead and get rid of these other lines, so it's a little bit clearer, won't place an accidental trades, ruin the session. So this area of previous broken lows, this is the level that I'll be watching if we get a bounce from this zone. So a bounce from here back up into the 74, 75 level. This could be a good area that we could expect some selling interest to emerge. Now, obviously, my preferred play here is that we simply get another breakdown, okay? I was short in the Aussie from last week. We had the breakdown, stall here, breakdown, another stall. I was out a little bit prematurely on that trade, and so I'm looking to get back in. And this block of consolidation at the bottom of this latest expansion move looks to me like a classic continuation play, where if we get a move down below those lows, we could likely see a run down into this zone here, which looks like the next key support level, okay? So again, I'm always looking for these areas of previous broken structure to use as targets and also to use as pivots, okay? We get a bounce here, then obviously a move back up to retest these broken highs again. Could be another area where we get that selling interest emerge. So another really interesting chart. And again, what we're seeing across the board, along with these key reversal candlesticks on the weekly charts, is that we're seeing these really big, important pivot zones, okay? That are really going to be the key determinants in the short and medium term direction of these pairs. So we come in some really interesting levels. Flows have dried up, as I say. There's not a lot of key data out this week. So it's really going to be a question of seeing which way we break as the momentum starts to come into the market, and then looking to get on board with that momentum and using these levels as areas to enter, areas to position against, also areas to target. Okay, and so finally, if we take a look then at Kiwi. So the Kiwi, another chart where we've seen, as we saw with cable, that sort of classic ABCD corrective pattern, and we've stalled at the top of that corrective pattern. Unlike the Aussie, we didn't make it as high as the retest of those early 2015 lows. Again, this is another big resistance zone in the market where we get these big broken structural areas. These are always key pivot points. So if we do get a move higher from these current levels, that would definitely be the next level that I'd be looking to engage to the short side. However, for now, my bias in line with this mild dollar positive bias is that we get a break lower. And the chart, pretty similar to cable, as I say, we've rallied just above those two previous highs here, and we're currently stalled at them. We drop down to the daily chart. So this area around 68.34, key price pivot zone. You can see we had 3 solid touches of this level, okay, before price broke above. It was a little bit messy. However, we held above here, failed at the double top, broke lower, and now we're back below this level. We haven't quite retested it, but we've come awfully close to retesting it. And so for now, we're holding below, okay? RBNZ were out last night with their financial stability report saying that risks to the New Zealand economy have increased over the last 6 months. This obviously opens the door for potential further easing. So again, mild dollar positive bias, strong bearish Kiwi bias. So the move that we've seen from that double top has taken us down through the rising trend line. If we go ahead and draw in our fib retracement from the lows here, you can see that we're currently stalled at the retest of the 38.2% retracement. We broke it initially, reversed sharply, and closed back above it, retesting the underside of that broken trend line. And so this chart is a little bit messy for me at the moment. There isn't anything totally clear unless we fail here and roll down below. And then as with the Aussie, I'll be looking to play a continuation to the downside. So we've obviously got this key resistance level in the market, which is still above. And again, I expect that if price does get a retest of that level, we're going to see it rejected and turn lower. In terms of the next key support zones, we've obviously got this area here. So it was a block of messy lows. You can see that just below that, we had these previous broken highs. So this is a key area for the Kiwi dollar. And it comes in at the 61.8% retracement from the low. So if price does make a move back down into that level, that's likely to be a sticking point. And then beyond there, we've sort of got the broader channel low, okay? So this is the ultimate channel low with the Kiwi dollar at the moment. You can see that we didn't quite get the channel formation. We didn't quite get above that channel formation high. We tested it, failed at the double top, and then reversed. So this area signals to me like we're going to get a move back down into that channel support. And again, channel support coming in at the 78.6% retracement. So obviously it's a little way off, but if we do get down there, you can see we had all of these previous key structure levels. That's likely to be a level where we see bounce. So that's going to be the key pivot point for the Kiwi dollar. Okay, so just taking a look, can you please take a look at the dollar Swiss? I've been long 97.10. Okay, I wasn't going to cover the dollar Swiss, but yeah, we can pull that chart up and take a look. Okay, so dollar Swiss, another question here of seeing a big key reversal candlestick on the weekly chart. We've had this double bottom, we've put in the key reversal, long from 97.10. Okay, so this is obviously a very recent trade. So if we pull up this level, okay, so first key thing here is that we had that big bullish hammer, the bullish pin bar candlestick on the daily chart. So for me now, the next key pivot point for the dollar Swiss, and if I'm looking to engage this, would be a breakout of this zone here. So where we've had these latest swing highs in this bearish trend. Okay, so the bearish trend structure that we've seen in place over the last several months in the dollar Swiss, you can see has a key pivot point here. So if we get a break of that double top zone, then that to me looks like a good spot to initiate longs. So obviously the double bottom, if we were taking that from a classic technical perspective, we'd be looking for a move similar to something like this, which would take us back up into this swing high here. So let's see where we shake out over the next couple of days. Good luck with 97.10. If we can get a break above there, as I say, that's looking good for a breakout. Okay, guys, so that concludes the session for today. Thanks a lot for joining in. I hope that you followed that clearly and understood the levels. As I say, the key points to take away are that we've seen some really big reversal candlesticks on the weekly, and we've got some really clear key pivot zones to monitor. for developments over the next coming days. Again, waiting for momentum to come back into the market. In the meantime, please head over to the website www.littlefishfx.com and check out all of the great stuff that we've got there, and check out our trade alerts, which are currently up over 3,000 pips since we started those just before the end of last year. So feel free to take a look at those. And in the meantime, have a great week, and I'll catch you next time. Thank you.